Welcome to Wall Street Times. Today our guest from CME is Charlie Moon, Senior Strategist at Trading Advantage. Great to have you, Mr. Charlie. Well, last night President Donald Trump delivered his first State of the Union address, a very lengthy speech in which he largely revisited his accomplishments over his first year in office and offered a handful of proposals he'd like to see considered in the coming year. So Charlie, for you, what's your biggest takeaway from his speech? And also, Mr. Trump promised to invest $1.5 trillion on the nation's roads and bridges. The infrastructure improvements is badly needed in this country, but he offered few other specifics. When do you think we can see some real actions?
I'm not sure when. I guess is when they actually initiate a plan and decide to move forward with it. Of course, it's going to be based on Congress approval, Senate approval. It seems that he's talking about trying to get us out of debt, and we're now adding on more debt. And it really fits in the theory of let's make America great again. Now, when we saw institutional buying in industrial names and material names, it's kind of mixed. It's been more spotty than not, but ultimately I believe that it's a very boom positive for the sector. I believe that in terms of secular growth, there's still upside, although some of it has been priced in. A lot of this was a bit anticipated, and ultimately, we may see one more boom come into play. Now, when we talk about stock and stock prices, ultimately in that regard, it's always going to be about the future valuation of that company. And when we see these huge names, these industrial names and these material names starting to really rally and gain some steam backed by institutional volume, greater than normal trading volume, that tells you how the big money is starting to play this. So in this scenario right now, I don't know when everything's going to play out. I know that this is going to be something he's going to push pretty soon. I would keep an eye on those names. I would keep an eye on the names of the materials. I would keep eyes on the industrials, and we'll see. They've been huge runners. The Dow components especially have been huge runners over the last 3 months. I just don't see it slowing down anytime soon.
Today, at Janet Yellen's final meeting as chair, the Fed kept its key short-term rate in a still low range of 1.25% to 1.5%, but signaled that it expects to resume raising interest rates gradually to reflect a healthy job market and economy. So do you think they may tend to more hawkish in the following months?
They're giving guidance towards 3, maybe 4. I don't think that they're going to make that kind of run. We're going to have to see once Fed Powell takes a seat, and it seems that there's some guidance towards a March rate hike, but if they're going to go for 4, that's highly aggressive. I think 3 would be more proper. Wouldn't surprise me if we only see 2, but I believe 3 is going to be the number we're looking at.
Dollar tanks today actually keeps falling. Today, a Bloomberg Nectar, a $3 billion Swedish hedge fund, is now shorting the dollar, anticipating a very strong momentum in the short run. So what's your real action and view on the dollar side?
I mean, I don't understand why they would do it now, but I don't know. I think that there's a great chance that we actually see the US dollar reverse, but it's really dependent on the overall markets, right? And if the markets continue trending higher, we could see the weakening of the dollar. So that's kind of what they're anticipating here. To me, I think that there's a great chance. We are starting to see some money come in regards to institutional money. There's active pursuing on the upside. It's a low risk, high reward scenario for these players. They just believe that the cycle may be over soon. Now, if they're making that kind of play to the downside, maybe they know something I don't. In all honesty, I just see the US dollar trending lower. I see it weak, but when I see something like that, especially in regards to the most powerful currency in the world, I just find that as a value play, and I wouldn't be surprised if we actually see the US dollar start lifting here shortly.
For good market, it seems like that good has stopped to respond to the changes in US real interest rate. So what is the right way to analyze good chart and focus its following moves?
I look in a little bit more shorter term, and to me, bullish is now starting to show strength to the upside. And sometimes you see gold deviate from the correlative plays. and it becomes more of a trading asset. And that's kind of how I'm looking at this. People are looking for value. It wouldn't surprise me to see gold futures somewhere around 1,500, 1,600 by the end of the year, but it also wouldn't surprise me to see it back down towards that 1,100 mark, maybe even that 1,000 mark. I highly doubt it'll get below 1,200. 1,200 is a pretty key level for the gold traders. I do believe that gold has better upside or better potential to the upside than the downside. And, you know, when I look at certain ETFs like GDX, for example, GLD, I've seen some pretty aggressive buying come into play over the last 4 weeks. So when I see that maneuver, is it, you know, in guidance of a short-term play by traders that are looking for any opportunity they could get in regards to low risk, high reward? Or is it that they're actually putting their money behind their ideas and speculation that gold is set to turn around and really rally up? If the inflow of money keeps coming in, I'm for sure looking to target around 1,500, maybe even 1,600 in gold by the end of the year.
Thank you. My personal WeChat account is now available to all of you. Please follow me and let's chat.